Hello friends, welcome to my channel and thanks for watching this video. Friends, another week has already ended and welcome to another series of USA Weekly Market Report. Now, things have become very interesting in the past, I would say at least a month. You can see things are going on a different path. Either you're talking about the inflation or the energy prices, the equity market, the bond market, everything is moving in a different manner. So there are some interesting things which are going on. So let's see what's there in the news which will impact the market going forward. To be specific, the next week, the upcoming week. So let's start one after another. As you can see, stock could soar to new highs in the week ahead, even though inflation data may not come in hot. Now we have seen that the stocks are moving and the entire stock market is making new highs. More specifically, if you are looking at different sectors which are now gaining from inflation. So there are, and you can see this is a perfect example that why Dow Jones is moving higher, because these are old economy stocks and inflation will definitely push the companies to raise their prices, and that will impact their fundamentals in a positive manner. Uh, so if you are looking at the key highlights, rising prices are the major focus of the market as both consumer and producer price inflation measures are reported. Strategists say there's little to disrupt the market run higher for now, but inflation could eventually become a problem. We don't know when will it happen, because the companies which are passing the inflation towards the end consumers, they are not going to be in problem. And investors will watch a parade of central bank speakers. Let's see how they are going to talk about the recent inflation, and obviously they are kicking the cans down the road. There is nothing much more important than that. Apart from this, the next big thing is this one. Now what we can see as far as these two important press release. Now the House passes $1 trillion bipartisan infrastructure bill that include transport, broadband and utility funding. Send it to the Biden. So the House passed a more than $1 trillion bipartisan infrastructure bill, and the legislation would put $550 billion in new funding into transportation, broadband and utilities. And the bill passed after the last minute scramble to reach a consensus between progressive and centrist on how to pass infrastructure package and a larger democratic social spending plan. So the crux here is we have to see, because there is also a plan to increase the tax rate on both individual as well as on companies. So now $1 bill has already passed and it's going to be signed by the president sooner rather than later. So whether it will have its impact on the pocket of taxpayers and business houses, that we have to see, right? Then we have Biden's social and climate bill clears procedural vote in House, where it still awaits for final approval. So the House of Representatives passed a key procedural vote to line up eventual passage of the Build Back Better Act, President Joe Biden's Social Security Safety Net and Climate Change Bill. So obviously, I think this is the same bill which has come after. So what they are actually doing, rather than a 2.3 or $3 trillion bill, it seems like they are separating all the bills, and they are eventually get down to the, if you are looking at the overall amount, it's going to be the same what they have announced previously. It is just that they are they are cutting it down into different bills. There is nothing new about it. Apart from that, So there is a flash which you can see. Berkshire's operating earnings pop 18% last quarter with Buffett's cash pile at record $149 billion. So if you are looking at here, so you can clearly see that Berkshire reported operating income of $6.4 billion in the third quarter, rising from $5.8 billion in the same quarter a year ago. At the end of the September, Berkshire's cash pile reached to a record 149 billion point $2 billion, and the record amount of cash came despite Berkshire's aggressive share buyback. So they have already done buyback, probably if not over. That it's a different thing, but they have $150 billion worth of cash. So I mean, there is a misconception, because we have seen this thing in the past, in the last 20 or 30 years, that Mr. Warren Buffett and Charlie Munger, what they are doing, they are sitting over a period of time. They are sitting with $100, $100 billion, $200 billion worth of cash, and people are directly correlate with the fact that market is now going to crash because crash because they are going to now, they are not spending the amount, and they feel that the market is overbought. Now remember one thing, they are not at all buying the overall market. They will buy some specific things at a specific price. So they are, you know waiting for that opportunity. This opportunity, they have the patience to hold it for the next 2, 3, or 5 years. They can hold the cash for, that is not possible for a person who are just in the market in the last 5 or 10 years. It is unthinkable for them to hold their cash for 3 or 5 years, but they have the patient, and they are looking for some specific opportunities at a discounted price. That's what they are doing. They do not bother about the overall market is going to crash or not, and if it is a crash, the overall view is something different. And the reason why they are piling up the cash, because they can't see any specific opportunity, and because they are not the guys who can buy 10 million or 100 million market cap company. So if they are looking into a company, it has to be a of sizable amount, first of all, and whether it will fit into their thinking prospects, that whether it's going to perform as per what Berkshire Hathaway is thinking, or what, to be specific, Mr. Charlie Munger or Mr. Warren Buffett is thinking. So these are something different. So if you do not, what I'm saying here is, it's good that they are sitting with the cash, but they have their different plans. You need not to directly connect it with the fact that now there is no opportunity. For them it is correct, but for you it's a different thing. And they are not, yes, when uh, everything is at discount, he is going to deploy a huge amount of money. That is a fact. But he is sitting with the cash does not mean that he is wait for something specific, and whenever he will get it, he will anyhow or anyways he's going to put his money. Okay, it doesn't matter whether the index is up by 20% or down by 40%. It doesn't matter for him. Now these are all the specific news. Let's go to the market. I think I have spent much more time than I normally do, but these are some important things that I actually think is important as far as the uh, news or important things are concerned, which will definitely have an impact on the stock market. Now, as you can see, overall the market is positive, whether you're talking about Dow Jones, you're talking about NASDAQ, S&P, gold, even oil. Oil corrected a bit, but ended with uh, 2.9 or 3% higher. What has surprised is the bond yield. It has crashed in the past 1 week, and that is probably a major indicator which is helping the stock market. We have a reasonable VIX. VIX above 16 is anyhow give you some volatile moves, but right now it is supporting the market. Apart from that, everything is up. Definitely, a natural gas is at 5.6. It is very near to its near-term top. And silver has started moving. Last week we have specifically talked about silver, and it has started moving. Apart from that, the most stable thing is the US dollar index. It is actually trading near 94.22, so it is very much stable. We have to see how central bank is going to, because now what will happen is whenever you have the inflation data, market will start, doing those buying or selling kind of things, and it will definitely have an impact on the market. So let's see all these different things. Let's start with Dow Jones. Now, if you're looking at the Dow Jones, what you will see here is this is the last Friday. This is the daily chart. As you can see, this is the last Friday, where the high that the Dow Jones has made is 36,483, but the close is 36,329. So we have to see whether this is a short-term top or not. Okay, so let's go to this is the hourly chart, and we have to see how the trend is reacting. Okay, here we are. Now technically a breakout has happened. Let me show it to you. So technically a breakout has happened above 35,669 or 670, but if you are observing this chart, and if I draw a line like this, I don't think this chart is properly updated. Let's go to the daily chart. It's not proper because these things are not available over here. So even in daily chart, the levels are going to be same. If I draw a line like this, you can see the stock, in the price chart of Dow Jones indices is nearly hitting the trend resistance. So this is something which you need to look here. So this is the level. Here we are. Okay, so this high need to get crossed, 36,500 at least. This high need to get crossed. Okay, then we are going to talk about rest of the things, because this looks like a top that that it has to get confirmed whether this is a top or there is a breakout behind that. So we have to wait for otherwise you will have your near term support at 35,669 or 670. But if you want to initiate, or if you want to think or go long, then wait for Dow Jones to cross and to go beyond 36,500, then think about anything long as far as the trend is concerned. Now this time, because generally what I do is looking into Dow Jones and NASDAQ, but this time let me revisit the long-term chart of S&P 500, because it's important to see where we are heading right now and what the trend is suggesting. And I am only, whenever I need a balanced view, I am using S&P 500, because it's a combination of both Dow Jones and NASDAQ. You will have balance of both the companies, of both the indices. So this is the long-term trend, as you can see over here. And if I draw a trend line like this, you can see the long-term target that we are looking here is at or around 7,400 or 7,500. Okay, so the trend high is in between 7,200 and actually 8,000 level. So this is the high, this is the range that we are looking at going forward. So obviously the overall trend is positive. There will be some corrections or consolidation. That is a given fact, because we are looking at a a long term chart, but in the short term you will definitely have correction consolidation. In the long term chart we know the trend and where it is actually moving. So let's go and check it out. So this is the short term chart, and it will definitely give you a balanced view of the trend and its movement. So if you are observing the monthly chart of S&P 500, so this is the trend that we are looking into. So this is the support level or the lower end of the range, and as far as the trend is concerned, so this is what we have as far as the higher end of the range is concerned. So S&P 500 looks positive, that's for sure. Okay, now whether this will correct or not, we have to further segregate this point from 4,300 to 4,600 or 700. But if you are looking at the hourly chart, you will see the lower term support is 4,400 and the higher, so the resistance is in between 5,000 and 5,100. Okay, so this is the higher end of the range, and on the downside we have 4,400. So we have to see how this is going to move. Apart from that, the important thing, one of the most important thing that is impacting the price behavior is this one. So there is a big fall, there is a very big fall that you can see. So this is US 10-year yield, and 10-year yield has crashed like anything. Okay, so there is a very big fall that has happened as far as the yield is concerned. And if you are looking at the trend, you can clearly see that the support is at 1.39. So from the highs of 1.7 it falls down to 1.39. So it is as low as it was trading in September or October. So this fall definitely marked by a positive price movement as far as the trend is concerned, as you can see over here, where you will find your support at 1.39, and on the upper end of the range you have 1.78 and 1.85. Now understand one thing, over a period of time in the past 2 or 3 specific months, what you can see here is the volatility, So now if there is a breakdown, that's a different thing. Otherwise, if there is a breakout, it will be a much bigger move than what you have seen in the past. It will definitely be a bigger move. Understand this thing, and next time if it started moving from this level, next time you will see that it will articulated to a point where you can see 1.8 or 2 as far as the US 10-year bond it is concerned. So you have to be very specific about that fact, right? Now let's go and check out the dollar index, because this is the most steady one, and there is hardly any price movement as far as the dollar index is concerned. And holding levels are very important, and if dollar index is holding its important or crucial level, because it is giving an indication that sometimes it's going to go and the high has been made. Sometime it feels like no, it's again going higher. So both things are happening, and you will see some very sharp moves. You will definitely see some very sharp moves as far as the trend is concerned. So currently the price movement as far as the dollar index is concerned is happening in between. So a breakout has happened 93.36, and the current range we have here on the upside is 94.5, which it has already tested at 94.77. So once it started moving beyond 94.8, it will technically be a breakout. And the thing is, technically this is a very stable trend and very positive trend, a double bottom pattern has been formed. And the thing is, dollar index is holding. It is actually, whether it is moving up or down, but it is holding its trend. That is very important to understand. And this is very important to understand here. And if I also analyze this part, if I analyze this highlighted section with or the current price movement, you will see that it is actually trading at the lower end of the range. And if I draw a trend line like this, so it is indicating a movement. If it sustain above 93.4 or 93.5, then it has a potential to move towards 96. So there, that is a possibility. And above 95, it is technically a breakout which will push the price of dollar towards 100 mark. So you will see how this is going to move going forward. We have to see. So there are some mixed signals that is clearly visible as far as the trend is concerned. Now one more thing which I have been talking about is the natural gas. Now why I am focusing on this one is because of winter, and now this winter is causing a lot of damage as far as the overall global economy is concerned. And if winter is a problem, energy crisis is a serious problem, then natural gas is going to impact by that, because it is one of the source of energy which is now being commonly used. Now you can see over here, the most important thing is it is holding its breakout level. So if you are looking at natural gas, so technically breakout has happened beyond 4.94, let's say 5, beyond $5. If it is holding, then you will have its high, near term high of 6.5, and once it sustains beyond 6.5, it can move towards 9.27 and $10. So you can see there are lots of mixed signals that are coming. Now I think the NASDAQ is left out, so we can't do that. So let's go and check out the NASDAQ part as well. So you have to be very much focused on the fact that the natural gas is going to be a point of concern, and once it started moving again, you will see it's going to definitely going to impact the stock market. So don't take it lightly. Now as far as the trend of NASDAQ is concerned, so this is the trend, current price action of NASDAQ. These are your support levels. On the upside, this is what you can find as far as the, here we are. So this is the resistance, this is the current trend in between which NASDAQ has been trading. So if you are looking at the NASDAQ, you can see 14,530 on the downside, and you will see 16,800 and 17,000 on the upper end of the range. And this is the fact, or the same thing it is visible on S&P 500, because if you are looking at Dow Jones, it is clearly indicating that it is near to a position or near to a level which can cause short-term volatility. And I think it is also available in the NASDAQ as well, because 16,000 is the level, 16,000, 16,100 and 200 is the level is going to become a short-term resistance. Here you can clearly see, and if it does not hold this level, there will be a short-term volatility here as well. So be mindful of the fact that if it started moving, so if it started moving beyond 16,100, then you will have 16,800 or 17,000 on NASDAQ. But if it does not, then it will create a short-term volatility. Okay, it will definitely create, because this has been the range for the past couple of months, this highlighted section, and if it doesn't hold, then it will be a problem. Now we have also seen a decent amount of fall as far as the WTI. This is the WTI crude futures, and we have seen a decent amount of fall over here, because from the highs of, I think, yeah, we are 85, it went down to 78, and now it is trading at 81.2, 81.3. So technically there is a fall, but it does not make any sense as any change as far as the trend is concerned. So if you are looking at this trend, if I simply draw these two lines, and if I draw some parallel trend out of it, here we are. Okay, so if I draw a trend out of it, we can clearly see the trend and the levels that we are looking into. Okay, here we are. So this is the trend line in between which the WTI crude futures has been trading, and as far as the levels are concerned, so you have 79.2 as your immediate support. You will have your stop loss at 72.49, but because the trend is holding, and if there is any big movement, which is a very high probability, possibility, whatever you may call it as, but the big move that we are looking here will be in between 115 and $125. So this is the big trend what we are looking at. So still, I would say, still this is a fact that we have around 40 or 50% worth of move that is yet to be seen as far as the crude futures are concerned. So these are the levels that we are looking at over here. So we have to be very much cautious. So it is apart from S&P 500, and because S&P 500 is a accumulation of Dow Jones and NASDAQ, and apart from the fact that uh, the bond yield has cooled off, there is nothing that is suggesting that the market there are different things which are impacting the market, and market can go easily. And there are some conditional level, as I've already told you, in Dow Jones and NASDAQ. There are some conditional levels above which you can go long as far as the trend is concerned, but you have to be a bit watchful. You have to be a bit watchful as far as the trend is concerned. And let me tell you now, each and every data has been recorded in a very serious manner, and if there is any shift in the data which market think does not fit into their thinking pattern, obviously it's going to get punished in the same manner. So be very much aware about this fact, and then we are going to reanalyze how this week has been panned out, and we will see how things have moved as far as the short term and long term trend is concerned. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.